Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in the S&P 500, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And likewise for the NASDAQ 100, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in the asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. Here's my agenda for today, Friday, July 26. First of all, I want to cover news items, economic data, and events for today. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with economic data for today. There were a couple of key releases. First of all, the PCE data came out at 8:30 a.m. Eastern Time. That's shown in this note here, actually. Shown in this note here, courtesy of Financial Juice. PCE data came out 8:30 a.m. Eastern Time this morning. Looks like to me it came in a little bit greater than expected, but there was really not much of an initial market reaction. And then Michigan consumer sentiment at 10 a.m. Looks like that was slightly less than expected and slightly higher than the previous number. All right, so that's the data for today. We'll take a look at the market reaction in just a minute. And note, next week, big week coming up, large cap tech stock earnings, a lot of earnings releases, and also the FOMC. More about that on Monday. All right, let's take a look at the S&P 500. Here's the reaction to the PCE data, 8:30 a.m. Eastern Time. This is the, oops, I'm sorry, I'm looking at the NASDAQ. Go back to S&P 500. And I'm not sure what happened. It looks like maybe news. We'll take see if anybody knows what happened right around 1:30. Please let me know if there was some event news item. All right, this is the S&P 500 ES futures and Bookmap. Kind of a muted response to the PCE data. And then the 10 a.m. data actually was a good entry point for a short scalp. Right at the upper daily expected move. That's the upper daily expected move for ES. By the way, we'll take a look at it in just a minute. I posted a very interesting screenshot for ES yesterday. Huge range, traveling from the lower daily expected move to the upper daily expected move, and back down to the lower daily expected move at the close. Actually, let's just go ahead and take a look at that right now. This is yesterday, full day of the S&P 500 ES futures. Reversal higher at this level that was the lower daily expected move, and the Spotgamma SPX implied move low, as well as the 5400 put wall just above that, acting as support. ES reversed at the ES upper daily expected move, traveled back down to that support level at the close. Acting Bull, welcome, glad you're here. Says we were at yesterday's daily high double top. Okay. All right, so that's from yesterday. Just showing you how important those options-based levels are. All right, so let's start with positional analysis now. I want to take a look at a higher time frame. Go to SPX. This is a thinkorswim one-day chart. Let me point out the key turning points this year. Big rally last year. Correction began this year, April 1st. Rally resumed after the April options expiration. That was April 19th options expiration. A little bit of a pullback after the May options expiration. Consolidation around the June options expiration. And then this current pullback, correction, whatever it is, whatever it turns out to be, began last Wednesday. That was the VIX expiration. So the Wednesday before the July options expiration was the VIX expiration. That's when this pullback correction began, as Spotgamma predicted. All right, let's pick this up now with a 1 hour chart. Thinkorswim 1 hour chart. Here's that pullback correction that began last Wednesday, again, VIX expiration. Here is the July expiration. Looked like the rally was going to resume, but then broke lower again. That was after Google and Tesla reported earnings. And again, yesterday, S&P 500 found support at the time, the 5,400 put wall. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on SPX, closing price last week. Note SPX is trading inside of that range. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from last night, yesterday at the close. I do post those levels in Discord every evening before the current trading day. All right, so SPX did trade up above the upper daily expected move. Looks like it's still above that level. All right, let's take a look at the other levels on this chart. The dark red lines are showing Spotgamma levels. I'm going to point out the key daily levels. First of all, the put wall is at 5,300. That's a strike with largest net negative gamma that can be expected to act as support. That level did move down from, again, 54 yesterday that acted as support. Moved down to 5,300 today. Traders, certainly as SPX moved down to 5,400, traders took profits on their puts, rolled down to 5,300. All right, so the next level up, and actually I missed the absolute gamma strike at 5,000. That's the strike with largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated, way down at 5,000. So the next level up above the put wall is the volatility trigger at 54.95. That's right in this cluster of levels. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. And note, at the beginning of the day, market makers' position on the gamma curve was extremely negative. And we'll take a look at that in just a minute. All right, so SPX still trading below its volatility trigger in a negative gamma environment. That level also moved lower from yesterday, just slightly, 15 points lower. And then finally, the call wall, way up here at 57.50. That's a strike with largest absolute or net positive gamma that can be expected to act as a resistance. And that's certainly not in play for today. All right, so again for SPX, volatility trigger put wall shifted lower, and for SPY there were no shifts in levels. All right, that's wrap up our view of SPX with a 1-minute chart. Then we'll get back to Bookmap. SPX gapped up this morning, chopped around up and down around the upper daily expected move, shown by the dashed blue line. Started a rally, steady uptrend. Looks like found resistance just below the zero gamma level at 54.90, just below the 54.95 volatility trigger. All right, that's SPX. Looks like it is. It almost, as Acting Bull pointed out, near the high from yesterday right here. Again, that was the upper daily expected move from yesterday. All right, now it looks like the S&P 500 is trying to recover. All right, so this is the ES futures and Bookmap. And I have my own cloud notes. So I can show SPX levels. There's that 0 gamma level. Looks like my levels are just a little bit off. Earlier today, the ES to SPX offset was 38. It's 39 right now. Give me just a moment and I can fix that. $39. All right, so that should set the correct, the SPX levels at the correct location. So the offset right now is somewhere between 38 and 39. I just set it to 39. Looks like now it may be closer to 38. We'll just leave it there. All right, so those are the SPX levels. Also have SPY levels on this chart. Here, round number levels, 547, 546 for SPY. Again, this 547 level looks like that was the around the top of the day, just between that and the 54.980 gamma level. I also have key ES levels. Here's this upper daily expected move, also the 5500 level. So these levels acted as resistance earlier today. Here's the upper daily expected move, twice acted as resistance. And the ES 5500 level, good entry point for a short scalp that I'll talk about in a few minutes. And then on the downside, right around the SPY 542 acted as support. All right, so those are the levels in play for the S&P 500. We'll take a look at setups in a few minutes. And again, shifts and levels. For SPX, volatility trigger put wall shifted lower. For SPY, there were no shifts and levels. All right, let's move on to NASDAQ now. This is the NQ futures and Bookmap. And let's take a quick look at the underlying index charts. We'll go to QQQ. QQQ traded in a range between the 460, that's a large gamma 2 level, and the 463 call wall. Right around the same time as the S&P 500. Good entry point for a short scalp, as that 463 call wall acted as resistance. And then just around noon, QQQ broke out above that level. All right, that's QQQ, levels in play. Again, pretty choppy morning and breakout around noon. And it looks like the trend break was actually at the 462 volatility trigger level. That was the break of this little trend line right here. Kind of a wedge pattern, I guess. All right, let's take a look at NDX. So for NDX, only one Spotgamma level in play for today. This is 18,906 combo 3 level, combining QQQ and NDX, gamma weighted open interest into one combined level. There shown in terms of price for NDX. And just like the S&P 500, I have my own cloud notes, so I can show QQQ levels. Here's that 463 call wall, 462 volatility trigger, and here's the 460 large gamma level, as well as the combo level for NDX acting as support. All right, so that's and we'll talk about setups in a few minutes. And for NASDAQ, the NDX volatility trigger shifted lower. And then there was a bearish hat trick for QQQ. Volatility trigger put wall and call wall all moved lower. So the volatility trigger and the call wall, as we're seeing, definitely in play for today. All right, let's wrap up our positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. Whoops, down here. Market maker's gamma notional position on the gamma curve at the beginning of the day. Note all these numbers are negative. This is for the S&P 500 and NASDAQ. Just as a reminder, in negative gamma environment, Spotgamma assumes that traders are long puts, market makers are short puts, hence the negative gamma. They have to trade with price to hedge their delta exposure. And these numbers, actually SPX shifted slightly less negative than yesterday, but still quite negative. And then the other numbers for SPY, NDX, and QQQ all shifted more negative than yesterday. So very negative gamma environment, and often difficult to maintain this level of negative gamma. If price moves up, implied volatility drops, puts will quickly lose value, and market makers will need to buy back their short futures hedges. All right, so again, I think this negative, extremely negative gamma environment is often very difficult to maintain. And let's take a look at the Vanna model here. And let's see what this chart is showing is market makers delta notional on the vertical axis and the spot price for SPX on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers delta notional may change with changes in price only. The purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. All right, let's check on current prices. So the low of the day for SPX was around 54.30. High of the day just under the zero gamma level at 54.90. So about 88, 89. All right, let's go back to the Vanna model now and check on market makers delta notional as it has as prices traveled on that path. So again, remember, low of the day, right around here while I'm holding my cursor, this vertical line, up to right around here. So as price has increased, market maker's delta notional has decreased, and they can buy back their short futures. That's a put Vanna rally. So that contributed to that breakout around noon in the indexes. This put Vanna rally, potential fuel for a rally. All right, so based on this, my thesis for the day, first of all, looking for higher volatility based on the very negative gamma notional. I had an alternate and a primary thesis for the day. First of all, based on the shifts in levels, especially for NASDAQ, the QQQ, a bearish thesis. Again, based on the bearish hat trick for QQQ. And then on the other hand, based on this put Vanna potential and difficulty in maintaining this negative gamma environment, if price does move higher or doesn't move lower, implied volatility drops, market makers will need to buy back short futures. So primary thesis, alternate thesis, and eventually the alternate thesis played out. All right, so let's move on to execution now. So everything that we've looked at so far, other than Bookmap, is based on static data. Spotgamma takes open interest data. They apply their algorithms to come up with the levels that I was showing on my charts. Also the gamma information. All right, now again, let's move on to real time, move on to execution. And as always, I'm going to start with the S&P 500 and take a look at what options traders have been doing in the S&P 500. All right, so what this chart is showing, this is the HERO chart, Hedging Impact Real-Time Options, HIRO. This is available to Spotgamma subscribers. This chart is showing a combined signal of options trades and market maker hedging activity in SPX, SPY, XSP, and ES futures. This is the index signal. There are two lines on this chart. The white line is showing price for SPX. The purple line is the HERO signal. And a rising HERO signal indicates traders are taking positive delta options positions, they're buying calls and or selling puts. A falling HERO signal indicates they are taking negative delta positions, they're buying puts and or selling calls. So that's the index signal. Typically pretty choppy, definitely choppy today. There's another signal that we can take a look at for the S&P 500. This is the equity signal, often a smoother signal. What this chart is showing is options trades and market maker hedging activity for a combined signal of all S&P 500 stocks. So again, options trades, market maker hedging activity for all 500 stocks in the S&P 500, showing a much stronger correlation to price today than the index signal. Often the index signal, again, more choppy, but can provide more of a leading indicator. So I'm going to go to full screen here. Let's zoom in. So one thing that I wanted to point out was the short scalp this morning, right around 10:30. Note around that time, HERO signal made a lower high, while price made a higher high. And let's take a look at the equity signal at that time. Zoom in. Also around 10:30. Again, strong correlation between options trades and market maker hedging activity and the equity signal today. The flow alert that comes in right before 10:30, signaling a significant options activity. These hero signals are often mean reverting signals, signaling a shift from positive to negative delta, and definitely did its job today as a mean reverting signal. All right, let's go take a look at the S&P 500. We'll take a look at this short scalp, and then we'll take a look at the breakout later in the day. So let's zoom in. So remember, 10:30, hero signals for both the index and equity signals were signaling a shift lower. And at 10:30, the volume dots in Bookmap were clearly showing this reversal. Green volume dots indicate market buy minus sell. So it's in terms of delta for market orders. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. Note the reversal right at the ES 5500 level. Buyers are exhausted. Aggressive sellers are come in. Price moves lower, right down to SPY 542, and around that level had acted as support before. All right, so that was the short scalp this morning in the S&P 500. Signaled by both the index and equities hero signals. All right, let's take a look at this breakout now. So in this case, it was about 11:45. Remember, this higher daily expected move had acted as resistance 2 times earlier in the day, and finally price broke out above that level, again right around 11:45. Let's see what options traders are doing. Go back to hero. All right, so we're on the equity signal now. So this was bullish pretty much from the open. And as the equity signal continued to move higher, price finally broke out above that upper daily expected move. Again, as traders continue to buy puts and sell calls. Let's actually see what they're doing. I'm going to shift to puts and calls. I'm going to have to jump back. So note, right around 11:45, the call line and that's the orange line. Traders buying calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. That's the orange line. And the rising blue line indicates traders are selling puts. Blue line, orange line moving the same direction. That's a very powerful directional indicator. And in this case, very bullish. So that breakout above that previous resistance level occurred as traders were, again, buying calls and selling puts in the S&P 500 stocks. All right, so that's the S&P 500. All right, let's move on to NASDAQ now. I'm going to shift back to the total signal. Let's go to NASDAQ. All right, so just like the S&P 500, there are 2 signals that we can take a look at for NASDAQ. This is the index signal, showing options trades market maker hedging activity for a combined signal of NDX, QQQ. And there's another signal that we can take a look at, similar to the equity signal for the S&P 500. And that is the MAG 7 signal. What this hero signal is showing us options trades, market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. So just like the S&P 500, there's an index signal and an equity signal that we can take a look at. And let's just stick with the equity signal. Zoom in. Very strong correlation today between the MAG 7 signal, options trades, hedging activity, and price action for the NASDAQ. Note the price here is shown in terms of QQQ price. 10:30, here's that short scalp. Hero signal reverses lower. Didn't last long. And then the hero signal turns up pretty sharply right around 11:35, 11:40. Price moves higher. Let's shift to puts and calls. Have to jump. Oops. Jump back. Traders start aggressively buying calls. Call signal goes from neutral to very sharply bullish. Traders had already started selling puts. Again, blue line, orange line moving in the same direction. All right, let's go to NASDAQ now. Go to NQ. All right, Hector asked about certain levels. It looks like you added to your question. Yeah, the levels are key for me. Watching price reaction, I'm watching order flow and hedging flow at key levels to make trading decisions during the day. So levels are very important. That's why I go to such lengths to get the correct levels on my charts. All right, so here's the breakout in NASDAQ. Looks like it was a few minutes before the breakout in the S&P 500. Breakout again above the 462 volatility trigger as traders started selling puts and buying calls in the MAG 7 stocks. And here's that short scalp earlier today. Very, very clear signal. Let's zoom in on that. All right, so Hector, here's a perfect example. This is the QQQ 463 call wall. Price approaching from below. I assume that it is going to act as resistance. Watching the hero signals, I see the hero signals shifting lower. Hedging flow shifted lower. Green volume dots on the way up. Buyers are exhausted. Aggressive sellers start to come in. Price breaks below that level, and that call wall acts as resistance, just as expected. So again, Hector, there's a perfect example of looking at order flow and hedging flow at a level that I expect to act as resistance, and it did exactly as expected. All right, let's zoom back out. All right, so now for NASDAQ, it looks like the price made it up to the lower weekly expected move. So again, that's the lower weekly expected move. Price dropped sharply at that level. All right, let's move on. Let's take a look at some stocks. So the first stock I want to take a look at is ARM Holdings. All right, let's go to ARM. See what options traders have been doing. Let's zoom in on this a bit. So I've got puts and calls. Note 155 is the hedge wall key gamma strike. Pretty much from the open, traders are selling calls, buying puts. Market makers take the opposite side of those trades. They have to sell stock to hedge their delta exposure. Price moves down to about until about 10:20. Call sellers, put buyers pretty much take their foot off the gas, start selling puts, and price consolidates again right around 10:20. All right, let's go take a look at Bookmap. Zoom out just a little bit. All right, so again, 155, hedge wall, key gamma strike. Hector, another example of a reaction at a spot gamma level, key level. Price breaks lower. Makes a series of lower highs, lower lows. Short pullback entries to VWAP. Then price breaks sharply lower below VWAP. More pullback entries. Let's do a quick check with the market pulse price change indicator. See how well it does in marking those pullback entries. Let's zoom in on this. All right, so what I'm looking at in the subchart here is the market pulse price change indicator. Positive extremes noted with bright green, negative extremes with bright red. In a downtrend, I'm looking for these green levels to confirm a deeper pullback entry. So the only one that was clearly marked with the market pulse price change indicator was this pullback right around 10 a.m. Just below VWAP. And that would have been good for about a 6-point move lower in ARM. All right, so semiconductors, again, pretty weak today. We'll take a look at NVIDIA in just a few minutes. All right, so there's ARM. Again, remember 155. Hedge wall, key gamma strike. Rejection at that level at the open as traders were taking negative delta options positions. All right, here's CrowdStrike. Let's take a look and see what options traders are doing on CrowdStrike. Zoom in a bit. So mainly calls driving CrowdStrike today. Traders selling calls, shown by the falling orange line. When traders sell calls, market makers buy the calls. They have to sell stock to hedge their delta exposure. 260, hedge wall, again acting as resistance. There you go. Hector, another key gamma level acting as resistance. Rejection at the 260 hedge wall as traders sell calls. Earlier in the day, they were buying puts. Right around, just before 11, they started selling puts. Net for the day, this number is positive. They are selling puts for the day. Call sellers take the foot off the gas right around 10:50. Start buying calls. Now they're buying calls, selling puts, price trying to recover. Oops. Sorry about that. Tone down the heat map just a little bit. I mean the volume dots. All right, so there's that 260 hedge wall. Price rejected that level at the open, so broke down below that level. Pullback entry to VWAP or above. All right, that's CrowdStrike. Let's take a look at Meta. Let's zoom in on, actually, let me, of course, I was preparing this in the morning. So this is what I saw in the morning. Pretty choppy price action in Meta. Up and down 5-point range. Good for short and long scalps. $465 is the hedge wall. 460 is not a Spotgamma level, but did act as support. Note the liquidity. Heat map shows a history of the limit orders in the order book. These were limit buy orders at 460. Came in at the cash open. Looks like they were filled here and never really came back. But that level continued to act as support 4 times. 465 is the hedge wall. Setting up a couple of great short scalps. Let's see what options traders have been doing. We're doing in Meta. Pretty choppy. Really, it was more about just reading price action and reactions at these levels. Let's go back to Hero. I'm going to shift to the total signal and go to Meta. All right, by looking at the total signal here, we can see that options trades, hedging flow for Meta was bullish for the day. Really making those longs at 460 better trades. And then price finally broke out above the 465 hedge wall right around 1145 as traders started aggressively taking positive delta positions. Let's go back to Meta. There's the breakout above the 465 level. The last touch of 460 level just after 10:30. All right, so there's Meta for today. Sharp move lower just after 1:30, like everything else. All right, let's go back to Hero. I'm going to shift back to puts and calls. So you can see really the orange line and blue line have been moving higher all day. All right, back to Meta. and call buyers and put sellers a little bit later took their foot off the gas as Meta reached up to the 470 key gamma strike. Call buyers take the foot off the gas. Looks like Meta did not quite reach it to this light blue line. That's the 470 key gamma strike. Again, call buyers, put sellers taking their foot off the gas as price reaches that level, the 470 key gamma strike. Price did not quite make it up to that level. Note also the limit sell orders at 470. Again, price did not make it up there. Classic absorption. All right, let's take a look at NVIDIA. Semiconductors weak today. NVIDIA making a series of lower highs, lower lows this morning. Let's check the market pulse price change indicator. It often provides really good pullback entry signals for NVIDIA. So we'll take a look at that. Meanwhile, while that's loading, let's take a look at the hero signal, see what options traders are doing in NVIDIA. Note for NVIDIA, more interaction with Spotgamma levels, 115.50 hedge wall. Traders buying puts, selling calls, price moves lower. And then around 11:30, 11:45, traders started buying calls, selling puts, price trying to recover. Let's go back to Bookmap. Let's zoom in on this. So the market pulse price and change indicator does a very good job of signaling the deep pullback entries. Remember 115.50, that's right here, is the hedge wall. So price broke below that level. Pullback entries. Pretty clearly on this trend line and also marked by the market pulse price change indicator for short entries for this downtrend. As traders again buy put, sell calls, price breaks below the 115.50 hedge wall. Price was trying to recover, made it up to 114.50 until this, whatever happened just after 1:30. Let's take a look at Tesla. Oh boy asked, could you please take a look at Tesla? Sure, here you go. And first for last asked, how do you do calculations, for example, for the QQQ on NQ chart? I'll show you that in just a minute. All right, so Tesla. Sharp drop in the morning. Let's see what options traders are doing. Zoom in. All right, for Tesla, 220 is the key level. It is the put wall, key gamma strike, and hedge wall. Options traders not sure what they're doing. Taking negative delta positions, positive delta positions, negative delta positions again. So I think the key in the morning was this 220 level, reversals below that level. Let's zoom out a bit, see what they're doing. So right around 11:30, traders started taking positive delta positions. So down, up, down, neutral, and then 11:30. Started taking positive delta positions, price moves higher. So remember that 220 level again. Let's go take a look at Bookmap. Break lower. That looks like the opening print. Pull back to that level. Break lower again. Then around 11:30, options traders start taking positive delta positions. Price breaks out above the 217 level. Breaks out above VWAP. Cumulative volume delta rising. You can see all the green volume dots coming in. Price breaks above that 220 level, and now that level did act as support for that 130 downdraft. All right, so aggressive sellers in the morning, sharply falling cumulative volume delta. You can see all the magenta volume dots. Cumulative volume delta starts to level out, and then aggressive buyers start to come in as traders start selling puts and buying calls. All right, there you go. Oh boy, there's Tesla. Let's go back to Hero. All right, so it looks like after the downdraft, 130 downdraft, traders have resumed selling calls and selling puts and buying calls. All right, let's get back to the question first for last asked. About the QQ levels on my NQ chart. All right, so let me take a look. Let's go back to the Thinkorswim QQQ chart. All right, I have this little script that displays this badge. So here's the NQ to QQQ relationship. Note this is in real time. It's changing all the time. So I watched that for a few minutes, kind of take an average. And this morning I was using 41.418. It looks like it's a little bit lower than that now. Maybe 415. Really doesn't make that much difference. All right, so I get that number from this think script. Let's go to QQQ. I'm using the price lines indicator to draw these lines, show the levels in the C levels chart. I get these QQQ levels from the Spotgamma homepage, the index levels. So I'm doing this manually. Then I have the actual numbers over here, so I can easily change this. So I have labels in this column. Whoops. Labels in this column, and the color settings for the lines in this column, round numbers in this column. So I get that ratio from ThinkScript. I'm going to click on this cell right here. So I see that has changed to now let's call it 415. So then I'm just multiplying this number right here by that ratio to get the equivalent NQ number. Going to drag that down, save that. Now refresh price lines. And I've got the new QQQ levels. All right, Hector asks, just wondering if for initiation, is it better to wait for price moves near lower and upper daily expected move than wait for call put resistance and support? All right, I place more weight on the Spotgamma levels than I do on the upper daily expected move, lower daily expected move. I watch both levels. So let's go to S&P 500. I have just started yesterday putting, so I've always had the upper and lower daily expected move. This is for ES. I do calculate that independently from the lower and upper daily expected move for SPX. I do calculate the two independently. This is based on the closing price for ES from yesterday. I also have Spotgamma levels. This is the Spotgamma implied move, 1 day implied move high. And that's also the SPY 545 level. And then I have all of the round number levels and the key Spotgamma levels. But I do place more weight on the Spotgamma levels generally than the upper and lower daily expected move. But I have all of them on the chart, and I expect them to act as resistance if tested from below or support if tested from above. All right, so again, I'm watching order flow and hedging flow at all the key levels. And oh boy, you're welcome. All right, last call for stocks. My time is up. Last call for stocks or questions. All right, everyone, again, my time is up. I want to thank you very much for watching. Thanks for your questions and comments. Have a great weekend, and